welcome to a new video. It's 20th of March 2021. I'm going to go through a few of our charts of interest this week, just to give you a little bit of a heads up on some of the charts that we're looking at and what we're looking to happen. Before I do that, make sure you have a look at the high priority news out this week. There's plenty of websites you can do that with. This is Forex Factory, probably the most common one, but let me just refresh this for a second. There we go. Yeah, it's 4:11 here in the UK. So yes, Monday today, not so much news, but as of tomorrow, Japanese bank holiday, CAD CPI 12:30. Now some of these times are an hour earlier than normal. Those of you who are used to the times that some of these news events come out, and that's because the US and Canada, they've changed their clocks, their times, and next week we change ours and it all goes back to normal. So normally we see news events out of US and Canada about 1:30 on average, but for the moment until next weekend it's going to be 12:30. FOMC statement, normally we would see that at 7 p.m. When that comes out. 6 p.m. this week, so make sure you are aware of that. What else have we got? Swiss National Bank press conference, rate statement, GBP official bank rate as well on Thursday, and all this Euro news here, GBP PMI, USD PMI. Oh my God, a lot of news going out there. So just be careful. You know, if you trade around news, make sure you've got suitable strategy in place. Maybe trade at reduced risk. You know, I'll leave that with you, but yeah, a lot to look out for there. So before you take any trade this week, I would have a little look at the news just to make sure you know what's coming out and when. So obviously FOMC statement on Wednesday could cause some serious volatility. I'm going to start off with gold. Now gold, obviously that Wednesday FOMC, this market could be heavily affected. Now if I was just going to give you a technical rundown, what I would say is on this weekly time frame, we've had 1, 2, 3 solid weeks of buying. Now we've seen back here in 2020 that we can have several weeks of buying. Here we had 1, 2, 3, a false break to the upside, a little bit of a push back, and then a rally to the upside. So what I'm saying is that I would like to see this market pull back before looking to see if he's going to test these highs here. But, you know, we are at an interesting area. If we were to look at this zone here, yeah, we are at an interesting zone where we may see some sellers come in. Now, there's a little bit of divergence here between this high, this higher high, this high, and it's a lower high here, indicating there's a weakness in the buying at the moment. If we're to look on... let me just have a quick look at the daily. Yeah, so the daily overbought position, overbought sentiment over this 70 mark. Now what I also want to show you is, just going back on the weekly, I've just put some moving averages on. And we can see how overextended we are from this 8 moving average on the weekly. We're also overextended on the daily as well, as you can see. Now, those of you who don't know about moving averages, basically, we would expect price in a trending market to move away from the averages and then pull back to the averages and then move away again, etc., etc. As you can see here, this is lovely, lovely price action where we push away from the moving averages in this uptrend, pull back, create a new high, pull back, and we'll create new highs, pull back, etc., etc. So look where the price is compared to the moving average. So I would like to see price pull back towards the moving average or averages before before contemplating any more buys. That's what I would like to see. Does not mean that that is what's going to happen, okay? But that's what I would like to see. You know, weekly is pretty much the same. Like I say, overextended from these moving averages. I'd like to see price pull back. On the daily, you know, we've got this. Actually, I'll show you on the weekly. We've got this lovely area which was resistance here, where we tried to break above, but failed. Tried to break above, failed. So it would be nice actually if price came back into this zone. So talking, we're about 1929, 1930. It would be nice to see price come back into this zone and test it. Now, if we just drag this to the left, you can see we have exactly the same zone there. I'm going to take the moving averages off. We have an area of support, an area of resistance. So price could come back into this zone and find it as support. And again, we may see some false breaks to the downside. So I would be, you know, setting alerts around this zone for potential opportunities to buy gold. You know, you've got to look at, you know, the news coming out. So do not forget about that. But this zone is a zone of interest to be interested, you know, in looking for buys. That's what I would say to you. I don't really want to buy gold where it is, even though, yeah, it could absolutely test these highs all the way up here. I want to get gold at a good value. And for me, after such big moves, and last week you can see the move, it's overpriced to me and I want to get it at a better price. I would expect price to retrace and at least test the swing high here, and then we'll see what's going to happen. So for the moment, potentially gold shorts on smaller time frames I would be looking at, and then once we get into this zone, then I'd be out of any short trades and I'd be looking for buy opportunities. Kiwi dollars on the watch list as well, just because there's a technical pattern here. As you can see, LS head and RS, which stands for left shoulder, head and right shoulder. So this is an inverse head and shoulder pattern in the making. So basically it's a low, a lower low and a higher low. That's what an inverse head and shoulders is. And we have our resistance here, but we call it a neckline when it's an inverse head and shoulders, or a head and shoulders pattern. Both the same, we use neckline. Now, the textbook way, I should say, to trade a head and shoulders or an inverse head and shoulders is to wait for a break and close, in this case above the neckline, because it's an inverse head and shoulders. We're looking for buyers to take control. So we want to break and close above the neckline and a pullback retest of the neckline. Look for a rejection and then go for longs, a long trade. I do also like the idea of maybe trying to catch some pips with a buy stop above this bearish candle. So there was a lovely hammer candle here. I don't know if anyone caught that, but if you were suspecting an inverse head and shoulders play out because we were at support, okay, lovely hammer candle there. We could have put a buy stop above there, stop loss below the low, traded up to the neckline. So if you caught that one, well done. Now, if we are going to reject this neckline and continue down, okay, with this bearish candle, then we should see price continue down. But if this inverse head and shoulders is going to play out, then we should see a break of this bearish candle. So end of day traders may want to think about a trade with a buy stop above today's bearish candle, assuming, you know, price continues like it is and the candle closes the way it is. You could think about a buy stop above today's bearish candle. Stop loss would most probably go below today's low, and then you're looking for that breakout to happen. Obviously, we've got some resistance to the left. If you look carefully here, we've actually got wicks coming into this zone, and then a false break, retest, and then it carries on down. So I would be taking off some money in this zone personally. So that's around about 63.32, was it? 63.38, somewhere around there. See these wicks, and then you have these highs here. That could be your second target, and you could be out of the trade by then if you wanted to. So that would be a 1.45 to 1. Now you can always wait to see if price closes above the neckline, and then if you're an intraday trader, you could look for that pullback into the neckline and buyers to come in again. But yeah, that would make sense to me. Putting a buy stop above this bearish candle in what could be the start of a new push to the upside from the buyers. So have a little think about that. End of day traders could trade what I've just said. Intraday traders could look for, you know, the break above and then wait for the pullback and get in on a smaller time frame. So that looks good. So gold looks good for shorts. Kiwi dollar looks potentially technically good for longs, which is interesting because both are traded against the US dollar. So, you know, you would have thought they might have moved in tandem with each other, but, you know, you can see gold, big push over the last 3 weeks against the US dollar. Kiwi, if I was to put the weekly on, we had a push last week, but nothing like gold. So I'm an avid fan of trade what you see and not what you think. This one, the pattern is an inverse head and shoulders pattern. If we break the neckline, then I see this zone being tested. That's what this chart is telling me. Gold is telling me that price is overextended, and it may continue to push to the upside, but we have that divergence on the RSI, and we have price overextended. So I would like to see price pull back. If it doesn't pull back, then it's not the end of the world, but I might not get in a trade long. Okay, but we'll see what happens. One more chart we'll look at. So looking at Kiwi dollar longs, Kiwi CAD, I've got within this bearish channel, as you can see, and it had a big old move here from October 2022, like one directional. We don't often see price like that, you know, just so impulsive for so long, because remember, these are weekly candles. So what I am looking at is this as a potential correction for upside. Now price has come into our support here. We can see our support, and support, and for the third time rejected here. Connecting these highs here, we can draw a what's called a CTL, counter trend line across, and we can see what potentially is forming is something like that. Let me just turn that line to black. Yeah, and it's basically a flag pattern. So it's a flag pattern after an impulse, and we'd expect this to break to the upside. The question is it ready to go? Well, all I can say is, yeah, we've rejected, if you look on the daily, or the weekly I should say, we have rejected this weekly support. Now we've come into weekly resistance, which is the CTL. So we could have another push down, maybe test these lows again, or we could break to the upside if the next impulse is going to begin. So what's happening at the moment is a retest basically of this swing high here. This is basically what I want to see on gold. You know, we've broken the swing high, and now I want to see gold retest that swing high. But this is what's happening on Kiwi CAD. So what happens here is very interesting, because what I would say is this is the daily time frame. If we were to break today's high, then potentially we're going to see price continue to the upside. So impulse, correction, impulse. Now, if we maybe today, if we close below this level, then I'd basically look for a retest of this level to short, because we might see, might be seeing this, and the downtrend continue. Might double bottom here, might even come back here, and we'll look for that trade there, because we are in a daily downtrend if you look at it, or weekly downtrend there. So what happens here is very, very interesting. If we see buyers come in, then we could break out. But if we continue down, maybe into this 85 level here, we might have a little bounce, come back into this zone here, which we might find as resistance, and we might look for a sell setup and trade it to the downside. So very, very interesting point at the moment for Kiwi CAD. So what happens here could be the defining moment. Are we going to break out of this channel, this correction, and have another big move to the upside? And what I'd be looking for would be obviously to come and test the top of this channel here, because that's what we've got. Huge channel there on the weekly or on the monthly. That's what we're looking at. So if we do break out, this could be a big move. You know, this is a weekly time frame. This could be a lot of pips. Let's just get the price range. You know, if we were to trade that up to here, it's near as, damn it, 400 pip move, which would be absolutely beautiful. Even if we just traded into this resistance here at 9,000, big number, you know, 366 pips. So definitely one to keep an eye on. But I think we can trade this either way. Either this correction pattern is going to continue and we do see another move down, or we're going to break out. Either way, there are pips to be made there, but we need to keep an eye on what is happening here now. Because we've hit that resistance, we might start to change trend, and we might start to form a new push to the downside. But definitely, I think one to keep on your watch list to see what happens. But yeah, like I say, and I'll go back to it just in case you didn't catch the beginning of the video for some reason. Lots and lots of news this week, and we're only really interested in the high priority news, which is what this is. You can press this little button here and have the medium impact news and the low impact news if you wanted to, but then it just goes crazy. Okay, we're only really interested in the high impact news, because that news is the news that's going to cause the most volatility in the markets, which is why we really need to know when that's coming out and potentially not trade around or have any trades pending around these high priority news events. But you know, each their own. Some people like to trade around news, some people like the volatility. I don't, but that's just me. Doesn't mean I'm right, doesn't mean I'm wrong. It's just I don't like that uncertainty, if you like, of trading around news. So yeah, gold, looking for short-term shorts for the moment. Kiwi dollar, looking for longs here. Kiwi CAD, I'm going to stay neutral on this. I do want it to break to the upside because I think there's going to be a big move. But we may see, we've got CAD news, haven't we? We've got CAD news tomorrow, Tuesday, 12:30 CPI news. So that is going to affect this market. So maybe, you know, if you're going to take a trade on this, think about that CAD news coming out, because you want to get it to risk-free before that news comes out. So those are a few charts of interest for us this week. Let's see how it goes. It's only Monday, so early days. Have a great rest of your week. Hope trading goes well. If you ever want to ask us any questions, or you know, we want to join Trade and Train, drop us an email at mark@tradeandtrain.com. We can chat to you and we can see how we can potentially help you. Make sure you are following our Instagram pages as well, TikTok. I'll put some links for those in the description below the video. So if you want to subscribe to those, then the links will be there for you. Otherwise, and apart from that, have a great rest of your week, like I said, and hopefully some nice trading opportunities to come. I'll catch you later, guys. Bye for now.